there is data out there that tells us that silver is behaving differently than past cycles, and its industrial side is changing its trajectory. So in that context, it makes me a bit nervous. I still like it. I'm still bullish. I'm still willing to buy a great silver stock if I can find one. And that's the hard part, the finding a great one. But I have to say I'm more confident in gold. Basically, if we have a reality check, we could still see the Fed break something. But even if not, the base case is still bullish for gold starting from 2,500. So I'm not one for wild arm waving, but I am very bullish for gold. It is a very high confidence trade for me. Now,
silver is often seen as the poor cousin of gold, but its dual role as both a store of value and an industrial metal sets it apart, making it more volatile. Unlike gold, which investors primarily hold as a hedge against economic uncertainty, silver's heavy industrial use means factors like supply and demand, geopolitical tensions, and fluctuations in the US dollar can sway its price. Analysts' forecasts for silver range widely, predicting prices could reach between $30 and $50 per ounce this year, potentially breaking out of its long-standing range between $20 and $24, where it's lingered for the past 3.5 years. On May 19th, silver's spot price hit a 52-week high at $32.51, reflecting a 40% rise since the beginning of the year, although it continues to lag behind gold, which has reached new record highs. In a recent discussion with Liberty and Finance, Lobo Tiggre, founder of The Independent Speculator, emphasized how silver's growing industrial applications are shifting its investment narrative. He noted that rising demand for silver, driven by its crucial role in green technologies, high-tech applications, and renewable energy, enhances its appeal in ways that set it apart from gold. According to Tiggre, this industrial demand significantly boosts silver's value, a dynamic that does not affect gold similarly. The Silver Institute projects that industrial demand for silver will hit a new peak in 2024, exceeding last year's record of 654.4 million ounces. This demand is expected to grow by 9%, reaching 710.9 million ounces. Notably, industrial uses now account for over half of the silver market, highlighting silver's increasing importance in technology and industry. While gold remains a cornerstone of investment portfolios during uncertain times, Tiggre suggests that silver's unique attributes and growing industrial significance could make it a key asset in the coming years. He believes that once current economic challenges subside, silver will become an even more prominent feature in his portfolio. We will present clips from Lobo's interview, but before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. Thank you, and enjoy the video.
I am bullish on silver. my thesis that got me called Darth Silver was never a bear case for silver. It was a future-looking case about whether or not silver will actually ever go back into circulation as money, since digital receipts solve the problem of making change for gold. I'm not sure that it will, but set that aside. We can let history decide that. Silver has been acting more like an industrial metal. Clearly, its industrial use case has changed and it really exploded. I actually see this as a good thing. That hasn't made it stop being a monetary metal or a safe haven asset. It still works that way. But it also has this other possibility. I think on the other side of the recession, once we're sure that any potential downside due to the industrial side is off, I see silver as the win-win metal. I think both the monetary and industrial aspects in an inflationary environment where the powers that be are blasting with the money bazookas left and right, I think silver does really well. Oh, and by the way, it's an essential part of the green agenda too. So whether you like that or not, it's happening, right? And it's another tailwind that really doesn't affect gold, but is a tailwind for silver big time. All of that said, last year silver did correlate more closely with copper than gold. That's just a mathematical fact. You can do the numbers and look it up. The good news is that silver has been tracking gold more again this year, particularly on, it's interesting to me, on like geopolitical events where fear makes people go into the dollar and gold at the same time. Silver tracks gold then. So the world is still treating silver as money, which is good. But it has been underperforming, right? We keep getting nominal all-time highs in gold, but we haven't had a new nominal all-time high in silver yet. I was just talking with David Lynn, and he showed me a chart where it looked like silver was correlating more with gold than I had thought this year. But in the last couple of months, the alligator jaws have opened. So no matter how you look at it, there is data out there that tells us that silver is behaving differently than past cycles. And its industrial side is changing its trajectory. So in that context, it makes me a bit nervous. I still like it. I'm still bullish. I'm still willing to buy a great silver stock if I can find one. And that's the hard part, the finding a great one. But I have to say I'm more confident in gold. I see it as less risky in front of the recession. After the recession, I expect to have a greater emphasis on finding more silver stocks in my portfolio than gold. But right now, in front of the recession, I'm trying harder to get more gold in there than silver.
Next week, the Federal Reserve is facing a crucial decision: whether to implement a larger than expected half-point cut to U.S. interest rates or opt for a more modest quarter-point reduction. This decision comes as futures markets increasingly anticipate the smaller quarter-point move. If enacted, this would mark the Fed's first rate cut in over 4 years, following a prolonged period of maintaining rates at a high 5.25% to 5.5% since July last year. The timing of this decision is also significant, occurring just 7 weeks before the November presidential election. Historically, when the Fed begins to cut interest rates, it positively impacts gold and silver prices. Tiggre expects this transition to occur around this time. However, the anticipated economic disruptions, such as a sharp slowdown or recession, have not yet fully materialized. Despite this, the fundamental factors supporting gold remain robust. The ongoing rate cuts are likely to support gold's value, and even without a recession, the rate cuts alone are seen as a bullish indicator for gold.
Go by the mainstream economic perspective. Yes, the Fed should be cutting, arguably should have cut already. If what I'm saying about the SOM roll and the gun luck indicator, if all that's right, they should have been cutting already. Trends don't just stop on a dime. Not just this unemployment uptick that I'm talking about, but let's say inflation. If the economy is cooling and that's bringing inflation down, you can't just say, oh, we're at 2%, we'll stop now, and that's fine, right? Whatever you did that made the bow of the ship swing ever so slowly in the direction you want, it doesn't just stop right there. So there is good reason, again, according to the mainstream outlook, to ease up on the brakes before you get to the goal. Arguably, they should have already. But my thesis was that something would break, and that hasn't played out yet, or part of my thesis. The other part of the thesis, though, is that regardless, rate cuts are good for gold and silver, monetary metals. So I'm, whether I was right or wrong about the hard landing and the reasons why, when the rate tightening cycle turned into a rate cutting cycle, that was going to be bullish. Now, I thought that might happen actually around now, but earlier when I was forecasting for 2024, and I said, this will be the year for gold. Last year it was uranium. This year it was gold. I didn't think it would happen until about now. But I thought that's when things would start breaking more. That hasn't happened. So what that means, though, is it's interesting because the other reason of rate cuts, recession becoming more undeniable, that's coming into play. But we're not at 1900 or 2000 gold when I made that call. We're now going into that at 2500. So the reasons to be bullish on gold are still ahead of us. And by the way, the Fed breaking stump thing, it hadn't happened yet, but that doesn't mean it's not going to. The way I see it is rate cuts alone are good for gold. Undeniable recession, that'll be good for gold. We may or may not get that undeniable recession. I think we will. I think it's starting to happen now. But even if we don't, the rate cuts are good for gold. So that's the minimum. But on top of that, if recession becomes undeniable, I think that's very good for gold and silver. And then if I'm right about that breaking things, like the other shoe finally dropping on commercial real estate or some of these other things, banks marking things to market that they've been able to get away with not marking to market. Basically, if we have a reality check, we could still see the Fed break something. But even if not, the base case is still bullish for gold starting from 2,500. So, I'm not one for wild arm waving, but I am very bullish for gold. It is a very high confidence trade for me. Now, gold bullion is not a speculation. It's not even an investment. It's savings, it's insurance, it's real money, and it's how I save money for the future. I'm not talking about that. I always am in the market for bullion whenever I have extra money that I want to put away for the long term. I'm talking about speculating on gold stocks. And so for that, trying to project where the market is going is very important. And I just see it as either bullish, very bullish, or super bullish as being the options. And it's very rare that you get an opportunity like that. Can I be wrong? Yes. But I'll tell you what, I'm putting my own money where my keyboard is on this.
Analysts are optimistic about silver prices through 2024 and into 2025, expecting gains fueled by increased buying amid geopolitical tensions, the upcoming US presidential election, and anticipated Federal Reserve actions. Meanwhile, gold has surged to new highs, rising over 20% this year and reaching more than $2,500 per troy ounce in August. Goldman Sachs research projects that gold could climb to $2,700 by early 2025, driven by expected Fed rate cuts and substantial purchases by emerging market central banks, highlighting the growing appeal of precious metals as safe haven assets in uncertain times. Please share your thoughts on Lobo's interview and predictions in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.